Here we are, March 2023 in Leesburg, Ashburn, and Loudoun County. I've got a quick update on the local real estate market, and then I'll wrap up with the Silicon Valley Bank failure and my take on how it might affect the market. We are right in the heart of the spring real estate market, and it continues to be one of the most volatile markets in the past 20 years. There are huge daily interest rate swings. What I've seen is that buyers have been incredibly price sensitive to the rate increases once they approach 7%. And rates continue to bounce in that direction for the past couple months. Despite interest rates approaching 7%, we are back in an environment where we are seeing multiple competing bids for properties that are priced appropriately and are in good condition. There is a perception that demand is strong, but that really isn't the case. Let's take a look at the Bright MLS Home Demand Index. The solid line is the buyer demand for homes in Leesburg, and the dashed line is showing Loudoun County. As you can see, buyer demand is suppressed and nowhere near the highs of last spring. So what is driving this market? It continues to be on the supply side with historic low inventory. Let's look at Leesburg. Both the 20175 and 20176 zip codes. Detached single-family homes in a price range between $700,000 and $900,000. There are only 4 homes for sale, and 2 of those are new construction homes to be built. Let's take a look at Ashburn, both zip codes, 20147 and 20148. And we will search price range between $750,000 and $950,000. It's a little larger of a market, but just 10 homes for sale. And 6 of those 10 are either new construction or over 55 communities. This is historic low inventory and something I haven't seen in the past 20 years. In a way, we are at an impasse, a stalemate between buyers and sellers. Buyers hesitant with rates in the mid-6s and at times 7. Sellers hesitant because they're most likely in a loan that is 3 or 4 points less than the current market and don't see much upside in giving that up. So what will give? If we see inventory approach levels that are typical, then price depreciation will be inevitable. If the buyers blink first and enter the market in larger numbers, then double-digit appreciation could be on the table again. Something I never thought I'd see so quickly. And that brings us to the failure of Silicon Valley Bank and the systemic risk to the banking sector. A lot of people that I've been speaking with do not believe that this is very important, viewing it as a small bank failure on the West Coast that catered to the tech industry and startups. I don't believe this tells the full story. Silicon Valley Bank had $200 billion in assets and is the second largest bank failure in U.S. history. The largest U.S. bank failure in history was Washington Mutual in 2008 during the Great Financial Crisis with $300 billion in assets. The total assets of all the failed banks during the Great Financial Crisis was $400 billion. So the SVB failure is not insignificant. The Swiss giant Credit Suisse has seen the price of their credit default swaps go parabolic. Credit default swap is basically insurance for the bonds against default. And when the cost of that insurance reaches a certain point, it indicates distress. Now, to be fair, the failure of SVB and Washington Mutual are different, as is the financial condition of Credit Suisse. But the fact that they are different is not the important point here. Our banking system relies on trust. And currently, March 15th, there is the possibility of a crisis of trust. The ratings firm Moody's just downgraded their outlook for the entire U.S. banking sector from stable to negative that reflects the rapid deteriorating in the operating environment. And that's their quote. The Treasury, Federal Reserve, and FDIC have all jumped in with the plan to bolster confidence in our banking system. The point I like to make here is that the next crisis won't be caused by SVB or Credit Suisse, but that could very well be the trigger or the catalyst that uncovers a weakness in our system that just isn't obvious right now and no one is expecting. I look back at my own experience in 2008 at the beginning of the financial crisis. If you watch the movie The Big Short, you might think that it was obvious to everyone what was about to happen. But I can assure you, the smartest people in the United States did not see that coming. And that is why I would encourage you to resist the temptation of trying to time the market. This is what I know. If you put your Loudoun County single-family home on the market today, you will do well. Better than any of us could have possibly imagined just 2 years ago. What happens tomorrow is anyone's guess. Thanks for watching, and please, if you have any questions, please don't hesitate to give me a call or text me. I'd be glad to help.